Welcome back to the Angel Nest, where real angel investors and entrepreneurs partner to build great companies. I'm David Hemingway. I'm a 5-time founder and now an active angel investor. And this is another of our series of podcasts with Johnny Walker of Rooled, Outsourced CFO and Accounting Services. We're talking about great startup founders and the companies they're building. Rooled are the startup finance experts. Today, Johnny and I talk with Nigel Eccles, a founder of Fan Duel and a board member to startup companies all over the world. He's raised more than $500 million in VC funding, and now he started BetHog, which combines sports betting with cryptocurrencies. Johnny and Nigel, thanks for joining us today. It's great to have you here.
Thank you.
Thank you.
Nigel, as a founder of FanDuel, you were an early believer in sports wagering, and I'm curious if the industry has grown up as you expected.
Give me a big question for the opener. So you've got to sort of let's go back. We started FanDuel in 2009. At the time, sports wagering legal in the UK and a lot of other countries around the world. The only place that was legal in the US essentially was Nevada, Las Vegas. It was explicitly illegal for the other states to legalize. They couldn't even provide it. They couldn't legalize it. And so it was a very small market. The casinos, even in Nevada, it was a loss leader. They just didn't really care about it. What they wanted is, they had it there because they wanted people to come in and then go play slots or go and play table games. Mm-hmm. And so they didn't really care about it. So people didn't really think it was like a really big market. Now, at the same time, lots of people are betting offshore, huge black market offshore.
Well, that was part of the incentive, right?
Yeah. So there was this huge offshore market, and people were they were betting with bookies in Curacao and Costa Rica. That was illegal. It was very clearly illegal, but there was a lot of demand. Mm-hmm. And so in 2009, when we launched FanDuel, we were like, well, we can't do sports betting. And I've worked in the sports betting industry in the UK, but we can do fantasy sports. And so we looked at fantasy sports and we're like, well, okay, a game that takes 6 months to play and the prize is $100 plus some dinky trophy. Mm-hmm. It's cool. People love it, but how do we make it more exciting? And so a few things that we sort of thought, we had 3 big ideas. The first one was 6 months. Play one day. Let's draft a team, you play in one day, and you win in that one day. Number 2 is, let's have bigger prizes. Let's have real prize funds. And some of our biggest tournaments in the end were in the millions of dollars, right? That was the second idea. And then the third idea was, at the time, everyone was doing this on their laptops. It wasn't mobile. This is 2009. iPhone had just launched. And we were like, well, there should be an experience on your phone. So that was the other big idea. And all 3 of those big ideas basically was what kind of was the starting point of what happened to DFS, which became a very big business, but then sports betting on top, which has become an enormous business.
Mm. Did you ever dream it would be as big as it's become?
I certainly, I always looked at it and I thought, US is such an anomaly, right? It's such an anomaly. But when you look at it and you go, okay, per capita, if the US had legal sports betting, that would be really big if you just sort of compared it to, say, the UK. But then you look at it and you go, but the US has got a lot more sports than the UK. The UK is very heavy for Premiership soccer, but the US is, you've got 4 major sports, but they also follow soccer and they also follow tennis and they also follow golf. And so we were like, okay, per capita it's going to be bigger, and also just sports was just so much more prevalent. You go into a nice restaurant in New York, you'll have sports on TV. You'll not see that in London. Right. So we were like, if it happens in the US, it's going to be an enormous market. And so, I think we did think, what we didn't know was, how does it happen, right? Because we had a federal law that said, hey, you New Jersey or any other state, you can't have sports betting. Right. So what we didn't see was how that was going to change. No one really knew that, but that was kind of we knew if that did change, it was going to be enormous.
Yeah. And how did that change?
Oh, yeah. So what happened was, it was actually New Jersey, looked at it, and New Jersey has a casino business that's been really challenged for many years. And they were like, well, we should be able to do sports betting. And they tried to do it. They got sued repeatedly by the leagues to say, no, there's this law called PASPA, which prevented states from doing it. And they fought it and they took it all the way to the Supreme Court. And in 2018, it was heard. And it was ruled that PASPA was unconstitutional. Because if you think about it, there's no other law certainly I could think of that says, hey, you Nevada, you can do all this good stuff. Jersey, no, you can't. You cannot do this. And so the Supreme Court said this is unconstitutional. So in a stroke, like in a pen stroke, suddenly all the states can go, you can legalize it. And Nevada, I think, was second. I think Delaware got, there was a rush, 2018, for all these states to get legal. Yeah. And then and since then, I think we now have something like 40 states have legalized it. Yeah. Really incredible snowball from that, first starting shot, which was 2018.
Yeah. And did the investors that you had up to that point where this kind of the floodgates open, did they perceive like the risk of FanDuel succeeding to be this regulatory risk? Was that really clear?
It was we had some brilliant investors, and I'd say we had some, let's say, less visionary investors. And I'll say, the brilliant investors were the ones who weren't going to say that a crystal ball, but they're like, look, we love this asymmetric bet, right? And that asymmetric bet was like, look, at minimum, daily fantasy sports is a great business, and it is a great business. But if sports betting were to happen, we would be brilliantly positioned. We had some other investors laughably were like, oh, I'm really worried about sports betting. If that happens, Caesars and MGM is going to crush us. And I remember going, like, you've been on this board for years. Like, do you not understand? Like, we have 500 people in the room, in this company here, whose job is, online marketing, is building product, is, marketing to, and we have built a sports-oriented brand. We have 1 million registered users that as soon as it goes live, we're like, boom, cross-sell. Right? Go over to Caesars, right? Like, I have a lot of respect for them. But they don't have that. Like, they don't have a brand. They don't really know how to market online. And so, when they came out of the gate, they were like, the first thing they did is they went and bought William Hill, which is a UK bookmaker, because they were like, we don't know how to do this, right? MGM partnered with a UK company called Entian. And even then, and that was, and very well run, BetMGM is a very well run company. Even then, they're a pretty distant third. The companies that dominate the market are FanDuel and DraftKings, which are daily fantasy sports. They were disruptors, startups. But it's funny, like, it wasn't just one of my investors. Like, a lot of commentators were like, just wait until, the Sands or Wynn gets into this. They're going to dominate. And I just think that repeatedly people make this incumbency error with startups. They're like, even us, like for us, we were like, well, what about when Yahoo? A lot of investors are what about when Yahoo comes in? I know today that sounds laughable, but back in 2009, 2010, 2011, Yahoo was a really big media property. And Yahoo did come in. And they were disastrous. Like they were fractions of a 0.1% market share. The product was a clone of ours. They didn't really know what they were doing. And I seen that repeatedly in startups. You get a startup and people are 100% focused on this one opportunity. When you're up against big incumbents, you typically win. Yeah. And that's kind of like, not all of them were visionary. Some of them were fantastic. They absolutely were like, this is a great opportunity.
Do you think that coalescence of skill and then sort of focus on an opportunity, does that tend to happen at a particular point in a company's scale? Like, even to put it very simplistically, like, is it at 100 people or 50 people? You kind of tend to have that scale of business where there's enough understanding about what to focus on and you coalesce around it?
Yeah, I think, my impression is very early stage startups, say pre-product market fit, you definitely have to be pretty scrappy. And like, I find a lot of entrepreneurs will do revisionist history on like their journey, and they'll forget about the scrappiness early on where maybe you're not as focused, because pre that, I think focus is a bad thing. You should be like, okay, maybe there's a better opportunity here or there. But once you have that opportunity, then you need to really focus. You really need to go, okay, how are we going to absolutely nail this? And that's from a 5-person team to a 500-person team, that you're still narrowly focused. And, it's interesting. And I've seen this with some founders pitching me, and they'll say, well, what's the revenue stream? And they'll have 5 revenue streams. And I'm like, oh, that's a bad sign. And the reason it's a bad sign is it sort of suggests they haven't really thought about what is the key thing. They think it's kind of additive. Well, we'll have this and we'll have this and there's that. Almost without exception, I think LinkedIn is one of the few exceptions. They grow from one massive revenue stream, and like, you look at Google, like that's obviously a massive revenue stream, but nearly every startup is like, there's one thing that they're going to do, and they're going to do incredibly well. And if that's a big opportunity, then that's a very, very
the other stuff
successful
will come.
business. Yeah.
And the little stuff is a distraction, right?
Yeah, the stuff on the sides, I even, like, I'm guilty of as well. Like, I threw up an idea that I've been working on with our C team just earlier this week, and they were like, doesn't feel really core. And I'm like, yeah, but it's really cool, and we could do this, and we could get these people on board. And they're like, doesn't really feel, I think what they were telling me was like, focus. And, so I like talked to them. I'm like, okay, but I need to convince them. And I talked to a few more people about this, and I was like, I'm making that mistake again, because you're always like, I think as a founder, I always feel a lot of founders want to disrupt, and that includes their own startup. Like they're like, okay, that's going well, it's growing, but I want to do something like really crazy, and bring that in. And so the job of a good founding team is like, yes, let's have those crazy ideas, but then have the filter and go, maybe we should just focus on improving what we have and keep doing that.
Right.
So investors are guilty of letting their emotions override their judgment, right? Because we all know that while the idea, the brilliant breakthrough idea is the fun part, the stuff that's really profitable is grinding out every day. Whatever.
I think we're all guilty of this. It's really hard. Like, like when you say, like, if we get 2-3% better every day this year, that is a phenomenal business. But doing, banging your head against the wall get that 2% gain every day is really hard. It's really miserable in a way. Like some days it's like, and some days, and it's not linear. Like some days it's actually down 10%.
Right.
And you just have to like, okay, how do I improve this conversion funnel just a little bit?
Right.
Do that every day, day in, day out.
Right.
And if you're actually going after a real opportunity, that's going to be an enormous business, but it's really hard to do that. It's easy to say it. It's hard to consistently do it day in, day out.
I remember you said this when we were fishing recently, that people come to you and say, I want to be an entrepreneur. And you're like, no, you don't. You want to be a successful entrepreneur. The implication being unsuccessful is just miserable.
Being an unsuccessful entrepreneur is like terrible. It's terrible. No one ever in the history ever said, I wanted to be an unsuccessful entrepreneur.
Better off to have a job.
But much better to have a job. It's much better to be an unsuccessful employee because you get paid every month. And if you're at least not in the bottom, like, 10 or 20%, you're probably just going to stay there and it's going to be fine. And, being in the bottom 50% of outcomes or even 80% of outcomes for entrepreneurs is typically not great, right? What everyone sees is the top. Well, sometimes they just see the top 1% and they go, that looks amazing. Well, yeah, that is. But, that's 1%. It's kind of like looking at, professional football and say, I'd love to be up there. And you're like, well, what about, are you willing to start down here and go through every step? And, that's the experience of somebody. So that's entrepreneurship's much more variable.
So tell us about BetHog.
So BetHog we started last year, and really the thesis was quite simple. We see crypto as an emerging asset class, and unlike sort of previous asset classes, crypto today is worth, depending on which day of the week it is, about $3.5 trillion in crypto. Quite dominant from Bitcoin. Bitcoin's about 60% of it. They're dominant. But the really interesting thing about crypto is it's highly liquid. So it's unlike other like assets, say like gold. Gold is not liquid. You're buying physical bars. Or when I was young, my mom was advised to buy Krugerrands, these little coins, and you stack them, and they're very difficult to sell, and they're very high transaction costs. Crypto, you hold it yourself. You self-custody it. A lot of people like myself, we would self-custody it. And so you have complete control over it. It's completely liquid. You get a price every day. You can sell it for, fractions of a percent, in terms of transaction cost. I can send money anywhere in the world almost instantly at almost no transaction costs. The people that are into crypto are typically young, male, risk-seeking. Well, who loves online betting and who loves online casinos? Young, male, risk-seeking, right? And so that to me was like, wow, this is such a big opportunity. Secondly, FanDuel, in the early days of FanDuel, something like 15 or 20% of our revenue was getting eaten up in payment processing. So people think, oh, I just send my money to FanDuel and it all shows up, so it's like free. And it's like, well, it's free to you. But FanDuel eats those costs. And those costs can be, because what often happens is someone will deposit, they'll win and then withdraw their money, and then they'll redeposit, and that goes again and again and again. And so you're talking about 15 to 20% of your costs. Additionally, you're subject to fraud. So a user comes in, deposits $1,000, loses it, wakes up the next day and said, you know what, I really didn't want to lose that. Contacts your credit card company, and then it's on FanDuel to prove that user actually deposited it. And the credit card company is like, takes the money back from us and says, no, you have to prove that this user deposited. Very difficult when they're remote. So it's very expensive. It's a bad product, subject to fraud. With crypto, we basically give somebody a wallet address. They send that money. There's almost no transaction costs. It's so small. It's instant, and certainly that type of fraud doesn't exist. They send us the money, it's there, and when they want to withdraw it, they can withdraw it. So it's a great demographic, and from a payment perspective, it's 100 times better.
Mm-hmm. So you're taking bets in crypto. Tell us
let me tell you about the product. Yeah. So that was kind of the background why we thought about it. So basically the idea was with BetHog was we want to build a crypto casino, and we had sort of, and there's a lot of crypto casinos out there. I think there's probably something like 2,000 of them. And we said, okay, there's two things we want to do, how we're going to distinguish ourselves. One was, we want to be a really fun brand. And that's when we spent a lot of time thinking about our brand, and we had a lot of different ideas. And we came up with BetHog because our designer, we saw the domain and we were like, I don't know. And then our designer came up with the logo, which was this hog. And we just all thought it was hilarious. It was just very funny. And we were just like, okay. One of the problems I think with betting and even FanDuel, when we were building FanDuel, we were so nervous about regulatory issues that we were like, we've got to be really conservative, like a bank, really trusted. We want people to trust us with their money. And so we're going to be really conservative. And so the branding a lot of the time was very conservative, right? It was very like, let's not push the envelope, let's not go crazy. And so I'm like, with this one, I want to go that way. I want to be fun. Right? Betting is entertainment, it's fun, it should be fun. Let's have a brand that's really fun. So that was the first part. Second one, kind of almost the flip of that, is of those 2,000 online casinos, I think maybe 2 or 3, if you go to their website, can you see who their founders are? In fact, actually none of them. No, one, us. We're the only one. If you go to the website and you go to About Us, you'll see a picture of me and my co-founders and my team, right? And you think, wow, these sites are taking tens, hundreds, in some cases billions of dollars in deposits, and those users don't know who runs them. Like, that to me is like insane, right? Mm-hmm. And so I'm like, and the crazy thing to me is like, maybe some of those people who run them, you think, well, I don't want to get in trouble and stuff. And I'm like, well, if the U.S. government wants to come after you, they'll find out who you are. Like, so just not having on it. So I'm like, that's crazy. I want to stand behind this. Like, I want my brand to be on it, that people know that if there's a problem, here's my Twitter, here's my email address. They can email me and we'll resolve it. Mm-hmm. I just find it amazing that people actually would deposit, never mind millions of dollars, thousands of dollars into a website with not, the company is offshore. I don't know who's behind it. That to me was amazing. So we were like, okay, trust, front and center. We're going to say, here we are. This is who's behind it. You can contact me if there's an issue. And so that was the second big thing. In terms of the product, users deposit in crypto. We take Bitcoin, Ethereum, a lot of stable coins, USDT, USDC, and then bet in those. Because one of the things that's interesting is it's not just that I want to fund my account with Bitcoin. If I'm pro Bitcoin, I want to hold Bitcoin, right? And so I'll deposit in Bitcoin, leave it there, and if Bitcoin goes up, my wallet goes up in value, and if it goes down in value. So they're betting in Bitcoin or Ethereum, USDT, and it's both casino and sportsbook. Actually, a very big part of our business, the vast majority of our business is actually casino. Sportsbook is the area that I kind of got excited about. I'm like, wow, we can build a really great sportsbook. People can bet with sports. And what you discover is, yes, that's great, but people will often, I'll put a bet on for tonight, but let's go spin up some blackjack for the next couple of hours. So, and they're both, they're both really, really good, really good businesses.
And where are you now in the journey?
Oh yeah, so we raised $6 million last summer. two major investors, Six Man Ventures, which is New York fund, and Will Ventures, also a New York fund. Six Man Ventures is much more on the crypto side. Will Ventures is very much more strong on the sports side. So we raised $6 million. We've got a team of about 15 people. Two of my co-founders are in the UK. So we've built up our engineering team there, and then our product and our marketing and business side is more in the US. So we have about 10 in the UK and about 5 in the US. And then we're just scaling the business now. It's growing really rapidly. With that 10-person engineering team, what we've discovered is that we're really investing early in product. We've seen a lot of our competitors, they just take a marketing focus. They're like, no one cares about the product. You can just throw out a product and put all your money on influencers. And we're like, that's not what we're going to do. We want to have the best product in the industry, and to get there, we've got to have a big team that's building and really focus on building the best product.
You were talking earlier about the naysayers early on in FanDuel and some of the other ventures. I think it started with the state lotteries when people started to say there'll never be enough betting to compensate for all this. And yet it's never true. The demand just continues to grow. Yeah.
So, betting is a recreational activity. It's a funny one. People often size a market dependent on what they and their friends do. So if you're not someone who bets a lot and your friends don't bet a lot, a classic one is lottery. Lottery skews for lower socioeconomic demographics. And so most people are they don't really think about the lottery a lot. And then when they see the numbers and they're like, oh my God! Millions, hundreds of millions of dollars every week is entered into the lottery, and they're like, "Who's doing all this?" And I'm like, "Well, not your friends, right?" But it is enormous. It's one of the biggest betting products in the world is lottery. So a lot of naysayers, sometimes they're like, well, I and none of my friends do this. So they sometimes size a market like that. What we see is with crypto, our user base are crypto users. We don't try and target anybody who doesn't have crypto, because the conversion, to use our product, you have to have crypto. You have to be able to send crypto to our wallet, and so you have to be comfortable with that. That's only probably a small percentage of the world, even of the people who own crypto. A lot of people who own crypto, they have it on Coinbase. It just stays on Coinbase. They don't ever take it out because they don't trust themselves. So we're much more targeted people that have crypto. They're very comfortable with it, and that's who our target users are.
And how big do you think that market is?
Well, we estimate today globally, and it is a global market. One thing I should mention is we don't yet operate in the US, so we only operate internationally, like nearly all of our competitors. We estimate the global market for crypto sports betting casino is about $10 billion a year. That's up from probably less than $1 billion only about 3 or 4 years ago. Big growth from COVID. Also, a big driver is if tokens are up, there's a huge wealth effect. If you bought Solana at $10 2 years ago, and it's now trading at $160, well, you're a lot richer, and you want to do something with it.
You're playing with house money.
You're playing with house money, yeah, absolutely. So we're more than happy to help you.
Is there then another? Is that the US not really being a market for it yet? Is that another regulatory event?
Yeah, that's and it's
the
challenge is a lot of the regulators are quite conservative. A lot of people still have this view that crypto is it's funds terror. I'll give you the critiques. It funds terrorism. It's there for money laundering. It's crime. It's for tax evasion. And the funny thing is when you go through all of these, crypto is the worst thing for that. The best thing for all of those things is typically cash, right? It's untraceable. That's what most crime is conducted in is cash. Why is crypto really bad? Because it's completely traceable, right? If I were to send money from my wallet to your wallet, anyone in the world could see that. You can just go and look, and if they know that's my wallet, they can see every one of my transactions and where I was sending money. So really bad for crime, really bad for money laundering, really bad for money laundering because you can see where all the money went. There are certain types of things that we see in crypto. There are certain types of ransom attacks sometimes where we see it's being used for crypto. But as a percentage of total fraud and financial crime, it is tiny.
Yeah.
What crypto is really good for is for very fast money transfer across the world at very low cost. And even today now what we're starting to see is the major banks actually wake up and say, well, we should have a stable coin. Like this is really like, JP Morgan, which is for years has hated crypto, is now gone, well, actually, having a stable coin would make sense. It's, so we definitely see it. The last administration, the Biden administration, it was incredibly hostile to crypto. And it was kind of bizarre because what we saw was there was a lot of crime in crypto that seemed to go unpunished. But the operators like, Coinbase, Uniswap, Gemini, all the kind of very legitimate, try to fill in all the forms, try to follow all the law, they were ones getting sued by the government. And so the government was basically like, we are going to try and kill this industry. And so it meant that for as entrepreneurs, a lot of entrepreneurs just went offshore. They just can't operate in the US, which was insane. So what we're now seeing under this government is no, we want to work with the industry. And, there's new regulations need to be written. Like, for example, the stablecoin bill. Like, suddenly the US is saying, you know what, stablecoins are really good for the US dollar, but we should have some regulation around it. And so that's what we're working. So that's what we're seeing under this administration, which is great for the industry.
Now, in addition to being a founder, I know you're also an angel investor.
Yes, yeah.
And it's rare that you can get such a perspective from both sides.
Yeah.
Right? Johnny and I have done a lot of these episodes talking about how founders can get funded, how they can set themselves up to succeed. What's your take on the current marketplace, and what are you hearing from the founders that you work with?
Yeah, so I'm not a very active angel investor. Actually, what I do is a little bit more interesting, which is I do a lot more. You can't really call it broken because I don't actually charge anything for it, but I do a lot more introductions because there's a lot of angel investors, a lot of VCs. And what I've really done since Fan Duel is I've built up a very large network of VC funds that I know. And I also similarly have built up quite a large network of founders. And so what I do a lot of the time is just introductions. And like I'll have founders will come to me and I'll say, okay, I know exactly the people you should be talking to. And, that actually works really well for me. What has happened very rarely, and I mean only in about 5 or 6 times, it's become a really good relationship and it's somewhere where I can add a lot more value than helping the people add money. I don't think that's something anybody should be compensated for. What they are like, look, we'd really love you to join the board. And I've joined that. And so Hey to Pataco in Brazil, Draftia in Mexico, a couple of other companies like that where, I started with, like I was talking about fundraising and I ended up becoming a board member. So that's what I do. In terms of what I see in the market, I think it's like I always compare everything back to like 2007 to 2009 when we were raising for Fan Duel. We were a startup based in Scotland. There was 2 VC funds in Scotland. I think
I say 2007 is a low bar.
Right, yeah. That was like, there was 2 VC funds. You could go to London, but that would be the next step. The terms there were a lot more challenging than what you see today. I always say to founders, I think somebody gave me a stat that was something like 11,000 active VC funds in the US today. And there's a lot more angels as well. Reason VC should never be easy, and I wouldn't say it is easy, but the money is there, right? And I do. Like when I work with founders, most calls that I have with founders, a lot of the calls I'm having with them, I was like, I don't think you're really ready for this. Like, this is what you're going to need to show. But once they're at that point, and I'm like, okay, I think it's a good market. From what I can see, a lot of people are raising. Like, there's certain areas. As has always been the case, there is areas that are red hot. AI, and there's areas that are stone cold, maybe say D2C, something like that. The funny thing is, what I've found is that's not necessarily a great indicator of whether it's going to be a good business or not. It's definitely a good indicator whether you can raise money, right? And raise money is, maybe part of the battle. But every so often, I'd say classic one was Fan Duel. Fan Duel created a category. And when FanDuel was raising money, it was incredibly hard. But when other companies came along after us, it was actually a lot easier because they were all like, look at FanDuel. It's like taking off this category.
The sheep effect.
Yeah. And so like, and they, and so when we were out raising money, they were like, daily fantasy sports, no one's ever made money in this category, right? Yeah. And so like I sometimes, and I say to founders, I'm honest with them, I'm like, look, if it's about raising money, one of the most important things is category. More important than your attraction and your team and everything. It's like, if you're an AI and you have a credible story and background, you're raising money on incredible terms.
Right.
If you're in D2C and you have incredible founders with a great background, with great traction, it's going to be pretty hard. So a lot of it is about, and that does mean that certain verticals get overinvested. And then your next challenge is if you're in that super hot category, then your challenge is like, how do I hire? And I have like 100 competitors, and YC has just spat out like 5 companies that are direct competitors of mine. They've just copied my playbook. So that's your challenge. The ideal position to be in is to create your own category. And that's what FanDuel did. So when we did it, no one was, we were the leader. We created a category. And so by 2015, 16, like we had a spreadsheet of all our competitors, and we gave up counting at about 100 because suddenly everyone said, this is an incredible category, right? All of those apart from DraftKings went to zero, or pretty much, they went to, very small exits, so they went to zero. And so my advice to entrepreneurs is like chasing after that hot thing is risky. If you really want to spend the next 10 years on something, it's trying to like, okay, what's going to be hot in like 3 years' time, And I guess one of the questions of FanDuel is if we had not done it, would somebody else have done it? I don't know. I honestly don't know. But, as an entrepreneur, I always thought it was a good strategy. I'd say with crypto casino where we are today, we're not the first. Like somebody like Stake is way ahead of us. They started in 2017. And I think we're early because I think crypto goes mainstream. But it's important for us to be early. We're not up until last year. We didn't see a lot of venture capital in this space for 2 reasons. One, maybe 3 reasons. One, a lot of kind of the typical entrepreneurs who raise venture capital weren't going into this space. They were like, we're not touching that. You can't do it in the US. That closes off a lot of entrepreneurs. Number 2 is a lot of VCs wouldn't invest in it anyhow, right? And then the third reason, I love the third reason, is a lot of these companies get profitable very quickly. And so you can I think Stake, like they were self-funded, got profitable very quickly, so they haven't done a big venture round. And I guess
if they had, then they wouldn't have been incentivized to do another one because they're profitable. So it becomes like a
right, yeah. So maybe they do the one round and then they're profitable, and so that's what we've seen is this industry's not seen a lot of VC. Started to see a little bit more in the last 12 months. I think I've seen now, after seeing probably none prior to 2024, I probably have seen maybe 4.
So Nigel, I think you're giving us a great case study, right? So online gambling's well established, and now you've figured out that crypto's going mainstream.
Yeah.
So you're getting into the next big thing.
We're getting in. I don't think it's mainstream yet at all. Like it is,
but you can see it's headed there.
Yeah, but that's the thing is we're here at a point where, like, here's the bet. If you're not into crypto and you come to BetHog today, say you're in, Canada, or country we operate in, you probably won't be able to join up. Like you probably won't even figure it out. Even if I said, I will give you $100 and you'd have to go and buy crypto and then get a wallet, and it's that hard, right? My bet is in 5 years' time, that will be dramatically easier. And because we can deliver such a good product, and because what that means is in 5 years' time, we'll be in such a good position whenever that gets a lot easier. Now, in 5 years' time, what I expect is all of the FanDuel, DraftKings, they will be like, we'll want to do crypto. Like we want to get into that market. By that point, we will want to be in a very good position.
You'll be able to help them with that.
Or just compete with them.
Are you able to target crypto users in your customer acquisition?
Oh yeah, we absolutely
do.
That's our, because we know if you don't hold crypto today, you're just not going to convert. And so we just absolutely do not want that person coming to the site. Right. And so we've very, very targeted acquisition strategies that go after people that we know have crypto and therefore that are going to convert.
And what's your conversion rate?
We were actually looking at it today. It's actually reg deposits about 20%. Clicks to reg was 30, which I was really happy with. And it's not. There's no incentives, like no like or there's very that conversion rate had no incentives on it. So yeah, it's pretty strong.
So just going to ask on that. How do you know who it is that has crypto? One of the essence of crypto is...
Yeah, this is the dark arts you're asking
exactly.
about.
Yeah, so what sort of correlations do you do from other information that kind of tells you something?
There are ways.
Yeah. Okay.
There are ways. So, there's certain places, like crypto is very strong on Twitter or X. And so there's you can see a lot of people congregate there. There's certain forums where people gather that are on crypto. There's certain affiliate sites that, like Bitcoin.com is a partner of ours. Does a lot of referral. So there's these ways of getting in front of them. Some of those ones are somewhat obvious, but getting the next level down is a lot of unobvious, and that's something that we've had to really build up as expertise. Because if you just put out an ad, if I put an ad up on Times Square, like I would probably get no users.
Yeah. So one of the things that with crypto companies, so we obviously we do Rooled manages the finances for companies that, well, I suppose it's cover all categories, but certainly when I think about it, they're managing dollars. Dollar valuation stays relatively solid, so you kind of always know where you are because you're working in one denomination, ignoring multi-currency. When you come to a company that has, because I presume,
you take about 12 different,
and you've got all those other currencies, and then you probably took I guess maybe let us know, but you took an investment capital either in dollars or perhaps a portion in crypto as well. How do you do that balance between managing liquid assets that are company ownership for financing the cash flows of the business? That to me has always seemed very
it's actually surprisingly easy, because whenever we take deposit in Bitcoin, we hold it in Bitcoin.
Right.
So and if the only issues that we'll run into is if a user deposits in Bitcoin and those users win a lot, and then the people that I say were playing Ethereum lose a lot, then we have like this sort of cross-currency issue. But then we just convert it. And so we do have some.
Yeah. But your company operating capital is all generally in dollars.
It's in dollars, yeah.
Right, okay.
In fact, the hardest part that we often have is moving our dollars. So we have an offshore exchange that we fund from our UK account, and we had this recently, which is, to compare this with crypto, which you can do it instantly at almost no cost. Here we had to move our money from the US bank to our UK bank, and then from our UK bank in small tranches to our exchange, and like every transaction you're getting whacked. Oh, and we had to obviously convert it from US dollars to UK pounds back to US dollars. And so you're like, at the end of this process, if any money left over, I'll be
a crypto arbitrage play there?
A disaster. So that's been the hardest part, which is TradFi, traditional finance. Crypto is just so much easier. It's just like, just move it very, very quick.
Yeah. All right, Nigel Eccles, fascinating episode where we get to learn not only about your philosophy on startups, which is really interesting, but how you're positioning for the next big thing at BetHog.
Oh, thank you.
So
thanks very much.
Johnny Walker from Rooled, Outsourced CFO and Accounting Services. Always a pleasure. Thanks for coming by.
Thank you very much, and thank you, Nigel.
All right. Remember, we don't make or recommend investments at the Angel Nest, and this program is for informational purposes only. We produce the Angel Nest with help from Rob Higley and Charles de Montebello. He's at the controls of CDM Studios at the historic Art Deco Film Center building just west of Times Square in New York. I'm David Hemingway. Thanks for listening. So long until next time.